Good morning, traders. It's 8:02 a.m. Chicago time on Tuesday, the 7th of February, 2023. Thanks for joining me on episode number 2408. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Thank you for the sound check, as always. Vernon, I feel like it's a weird day if you're not here commenting first thing in the morning. I start to worry about you. Anyway, thanks for joining us today. So we're going to dive right into the pre-market summary sheet here from Convergent Trading, a meticulously put together piece here by the team. Overall, markets are mixed. You can see the yellow across the risk assets and the indices. Overall mixed. The Dow down 109 points, but and so is the Russell, and the Russell's down the same amount of basis points, 33 basis points so far. But overall, just sitting sideways. A pretty balanced overnight session. And other than crude, we'll talk about crude for a minute. Those of you who are in Convergent Trading, look at my comments in the chat room from last night about crude. They're coming to fruition today. We'll look at crude a little bit because crude is trading in a very structured way. Crude is really following the auction really well. Actually, the entire market is. So we'll talk about that for a minute. As far as pre-market earnings, BP, Centene are the key players this morning. BP, let's see. BP, wow, missed by 4.79%, came in at $1.59 versus $1.67. Revenue $53.76 billion. I thought they were bigger than that. Centene came in line, basically 86 versus 85 cents on 35.56 billion. Pretty much hit it right on the nose. And then from here, after the close, there are a whole bunch of other earnings, Disney being the key one that's left ahead of us. So just find an online calendar and look those up. I'm not going to cover those. There's just too many of them. The key thing today, of course, is Fed Chair Powell. There's a Q&A taking place at 12:40 Eastern today, and the expectation is that Fed's Powell is likely to reiterate what he said last Wednesday, that further hikes are probably coming and will hold a rate at an elevated level for an extended period of time. There's fear that given the jobs report changed things dramatically on Friday, historic jobs report. I'm sure it's going to be a big part of the State of the Union tonight for President Biden and his party. But overall, there's a concern that Powell may get more hawkish. Now, Bostic yesterday came out and said the NFP suggests the ceiling might need to be higher, that they should, the Fed should the Fed might potentially need to hike in 50 basis point increments again. Again, very hawkish macro type headlines from the Fed speakers, and there's just a barrage of Fed speakers and central bank speakers over the next couple weeks. So there's going to be a lot of headline risk. Fed's Kashkari rates may have to be held at higher for longer, not forecasting a recession. And then the RBA, the Australian Reserve Bank, the Reserve Bank of Australia is what it's called, hike 25 basis points is expected, suggesting this will not be final increase of the cycles. A strong Japanese wage growth mainly might be due to bonuses, and then a huge BP earnings beat. But it's huge BP earnings beat. I'm not seeing that actually. BP, a dollar. Yeah, I guess they missed slightly, so I'm not sure. Anyway, what's on the calendar? IBD tip. We're expecting the Mannheim auto auction results, car sales number. This is really big. This is a big piece of the inflation figure today. IBD tip at 10, and then you see it in front of you there. 1240 is Fed's chair. That's the key piece. And then we have Fed's bar at 2, consumer credit at 3, and that wraps up the day. Looking at the S&P, the S&P is so far has been balanced. We'll look at it in a minute. The stats are 188,000 contracts traded, well in line with what we would consider normal. Remember, the volume mode is 230 for the overnight session, so 188 is in there. 30% inventory is long, and the range has compressed compared to the prior overnight session and the last few overnight sessions. 23.75 point of control is at 41.2750. So not much to glean from the S&P overnight, other than a continuation of the same thing as yesterday. Here's the S&P. So we're going to start big to small. We're going to look at the big picture, and that is the daily profile or TPO chart. TPO stands for time price opportunity, and it's a unit of 30 minutes. And then you take each unit of 30 minutes, a 30-minute bar, and then you compress it to the left as opposed to showing it on a time basis, on a time scale at the bottom. You're compressing it to the left to create a histogram. That creates what's called a market profile. And you could see yesterday's market profile, very Gaussian, pretty just textbook histogram from your Statistics 101 course or high school statistics course. Value area around the mid and the point of control. And we have an evenly distributed profile, and we're trading right in it currently. We are currently in range, slightly out of value on the TPO chart. And you can see where we are. We dug into this weak structure, which we did yesterday, all the way down to 4107. And what we were looking for yesterday was, on our price map, 4090s, huge. 4090s, it's just big. It's a point of control, it's a high, and it's a launching point on the FOMC day. This is a very important price to see tested. It closes the weak structure from the Fed, and this is what's expected. As I said last week, this is what's expected over this week, over the next few days. But yesterday was a very, very dead trade. When we came in yesterday, let's go back actually. When we came in yesterday, remember we were trading right in here, and I had said that I'm expecting it to be responsive, potentially test that prior low down here in the 35 zone, and then I expect it to kind of fail and then continue lower, hopefully into the 4090, at least to the 4107. And I narrated a trade setup in the Convergent Mavens channel that classically took that particular setup. This is a classic setup for a market that is opening out of range, and when it's an open auction out of range, meaning it's opening out of range. So compared to yesterday, it's outside of yesterday's range. That's an open out of range. And if it trades up and down, above and below the open, and establishes a clear swing high and swing low, we call that an open auction out of range. If we have an open auction out of range, this is a way to predict, to help kind of pin down what kind of day we expect. And when we have an open auction out of range, it means that most likely there's two-way action. Participants are on both sides. The market's not driving directionally responsive back to the prior day's high, and it's not driving down initiative away from yesterday's range. And so we can fade the edges. And the first edge in yesterday's trade is that prior day's low at 41.35. And so we're looking for a potential push through 41.35 initially, with a pullback to about 41, I think it was 30 maybe, for a continuation. If it doesn't do that, then look for a push into 41.35, come back, and then sell the return, sell the push back up towards 41.35 for a rotation down, and hopefully you'll get the overnight trade, the overnight stat. So let's play this out. This is a bit of a kind of a quick crash course here, not only in profiling, but also in the way I look at setups. Here's the open. It's this little dash green line. The market opens and pushes. Market opens, pushes down, pushes up. So now you have an opening swing. It's opening outside of the prior range, the prior day's range. Okay, so we're in an open auction out of range. So I can trade both sides of the market, meaning I'm looking for outside in type trades unless it breaks directionally in an impulse. So yesterday looked for the push, didn't quite get there, pulls back, expands the swing down, consolidation, nothing to do here, and it just fails early on. It just fails to push and hold that prior low, the prior day's low at 41.35, and it sets up this push down, which is the first impulse for pullback, the first pullback towards the mid, VWAP, and so on for a short, looking for the overnight low. Remember, the overnight high and the overnight low, 43 on the top and 41.07 on the low. Historical probability on the overnight stats, somewhere around 97, 98% probability. So we always kind of shoot for that if we haven't gotten it. So we're looking for the overnight stat. We get the overnight stat. We get the IB stat. And then we reverse right back. And this kind of cancels this trade. So once that happens, we know that it's just, we have a point of control, mid and VWAP right on top of each other. It's all just spaghetti. And then we lay off. So the only thing I saw yesterday was that short. And once it poked into the prior day's low, what I was looking for is a pullback into this range here to hold. And it never held, and it just pushed through. And there was just nothing more to do for the day. Yesterday was a good sit on hands day. It was a great sit on hands day. And this morning in the overnight session, it looks like a multi-distribution profile, but it really is just balance. And this morning, all it did is it traded inside of yesterday's complete balance. So yesterday was completely balanced. Look at this. Even the volume profile, which is a lot more precise and detailed than the TPO profile, the market profile, you could see it's completely balanced with pretty decent taper on the extremes, and the market just loves this 41.20 area, 41.20, 25 area, and so it's holding on to it. This morning, point of control, overnight point of control is right there. Full session mid, full session VWAPs on top of each other, and we're moving away, but we are still inside of yesterday's range. So that's the narrative. That's the context. So what does that mean to me as a trader? What that means to me is that I expect this morning to be responsive. I expect us to open and be responsive into prior settle, prior settle, which is 41.23, and the prior point of control, which is 41.25. So I expect, because we're in balance, I expect the market to return to 41.23 and 41.25. Do I buy it on the open and hope for the best? No, I don't. What I'm looking for is for it to start to push that way a weak pullback that sets up a long, and then our target becomes that. We scale because it's balanced. We scale because the expectation is this entire range was accepted yesterday. We have actually pretty decent relative volume yesterday. We held the relative volume throughout the day. I'll show you the relative volume right here. Look at that relative volume. The black is the 20-day mean for that 30-minute period. This is a 30-minute chart. And the orange and white are yesterday. So you could see at the open, we were pretty much covering the entire black bar, which means that we traded within that, right up against that 20-day mean. The second period, which is 9:30 to 10 and 10:30, 10 to 10:30, also in line. The third period, a little bit heavier. The fourth period, a little bit heavier. But throughout the day, until the end of the day, the market had really decent relative volume in balance. So what that means to me is that it wasn't just a dry day where we're expecting something or just not trading. The volume was there. It's just traded in balance. So I expect that if it comes back into the prior settle, I expect to hold something to the extreme. And your extreme is going to be value high of this region. Okay, so the prior value high is not that much higher. It's 41.29. So I expect that if it pushes back into through the value low of 41.18, I'm going to look for the pullback, aim for the 41.23, 41.25, and hold a runner to 41.29, but don't sit on it because the market's already indicated that it likes this range and it's balanced. So I'm not going to sit here and try to ride a runner, at least not a heavy runner, back into 41.35. If it happens to break into 41.35, a lot of the volume, remember, in futures, every contract that is bought has a seller. Every contract that's sold has a buyer. So there isn't float. The CME doesn't issue stock, doesn't issue contracts. There's an infinite number of contracts that can be created. And so what that means is as we push out of yesterday's range, a lot of the volume that was in balance yesterday, which is about 1.2 million contracts in RTH, 1.5 million for the entire session. A lot of that volume, not all of it, is likely to have to cover. These are shorts that are late and they're likely to cover. And so if it pushes into 41.35 and squeezes this high, I'm going to look to buy pullbacks for what? For the prior day's settlement or close up in 41.45, 41.48 from 35.30. That's the secondary setup. The push down, if it opens and immediately squeezes, there's nothing for me to do. Squeezes to the downside, there's nothing for me to do. If it takes out the overnight low, which was 41.10 yesterday, it pushed to a low of 41.04. If it squeezes to the downside, there's nothing for me to do. What I'm looking for then is to gauge what kind of pullback it is. If the pullback is weak back into yesterday's range, then I'm going to look to lean on value low, which is 41.18 for a short continuation. And the target for the short side is, come on, you know this answer by now. The target to the short side from 18, from our hopefully 41.18 area. What is that target? I'll let you answer that, those of you who've been paying attention. So that'll be our price map. Once, if it takes out the target to the downside, which again, I need you to punch it in. What is the target to the downside? Don't make me strangle it out of you. If it hits that target to the downside and is unable to find buyers, then it is likely to continue to wear 40.60, right? 40.80, then 40.60. Yes, 40.90. Thank you. 40.90 becomes the target. That's your ledge right here. Remember, I talked about it at the very beginning. Point of control, high and close, and the breakout gap, the breakout price for FOMC. Very important area. This closes the week structure. gets us into 40.80, which is a naked point of control, and then the sum total of the action here is at 40.60. So it's 90, 80, 60 as the key targets below. And if it pushes higher, then we're looking for 41, 45, right? So that's your price map. I know I've been talking a lot. I wanted to kind of walk you through the process. There are a lot of new people here. I was looking at the analytics for the channel yesterday, and there seems to be about a 20% day over day increase. I don't feel like that sounds correct, but there's about 20% of viewers are new to the channel, so I want to make sure you understand the detail that goes into it. There's no spark or flash or whatever here. We're not doing anything fancy. We're doing classic professional trading. Here's Crude. So I gave you the ideas behind the big trades behind the ES today. Here's Crude. Crude yesterday opens inside of this massive range day from last Friday. I talked about this $4 plus in range, outstanding performance on Friday. Just very bearish engulfing, closing at the extreme. This is a neutral extreme down day in Crude. This is a very bearish indication. And what I spoke about is while it was opening here, that I would look for every opportunity to get short, targeting that low at minimum. At minimum, you're looking for that low in the 73.25 area. But the key target is to close these single prints from way back in December. And look at what it did. It opened, the green arrow is the open, the yellow line is the initial balance. It went right down, closed the single prints, and came all the way back and settled around the open. So we ended up with like a doji looking candlestick on the daily. This is RTH only. I'm not looking at extended hours. So as I wrote last night in the Mavens channel on Convergent Trading, I wrote that note the formation on the daily bar today. It pushed through the 72.73, the prior month's low right here. The prior month's low pushed through 72.73 and found buyers. It had an excess low, found buyers very quickly, and immediately rejecting the lows, pushing right back above prior settlement. So it settled higher. Prior day's settlements down here, closed, and it closed higher. Very bullish action. This is a market that has poked below the most recent low or the most important low, the prior month's low. It poked through, it found buyers and came all the way back to settle higher. Very bullish. And so I talked about this may be a swing low. This was last night at about 8 o'clock. If I were swing short, I'd be tightening stops, hedging, or watching closely at least. So Crude tested below the monthly low, filled the singles from December 12th, and bounced back up. Very, very bullish action, expecting it to extend higher. So Crude has a weak structure from Friday, left singles at 75.94 right here. 75.94. Look at these singles. These are all weak structures, the shaded areas. And look at the overnight high, 75.98. So 75.94 was where the singles were on Friday. And overnight, it managed to go from the close all the way to close the singles, repair that structure, and then come back and sit in the middle here. Outstanding performance from an auction perspective. 4 minutes to the open. I'll let you go. Thanks for tuning in. Don't forget to hit the like button and to subscribe to the channel. The link to subscribe to the channel. The subscription is to the YouTube channel. It's free. It just gets you alert when the videos go up or when the live stream is being launched. It helps people. The more subscribers we have, the more easily traders can find it, maybe pursue their potential as traders, hopefully. Good luck, and I'll catch you tomorrow. Take care.